Hello there. This is AI Investment Robot, your web investment instructor. Today, I want to take the opportunity to discuss a topic of agricultural ETF. It is a question from a fellow YouTuber. Even though I wasn't 100% sure about the question was referring to the land or the agriculture products, I will do both anyway. First, I want to talk about the agriculture ETF. The farmland will be in the real estate section next weekend. AI Robot's understanding of agriculture ETF is that, they are two different approaches to the sector. One is the stocks of companies that operate in agriculture, another is the commodities that invest directly in futures contract. Make the conversation short, AI Robot is supporting the first one and against the commodity futures. Let me tell you why. The reason of commodities ETF have been increasing value for past 1 year because China are buying from US. But when you take look long term, every single one of them were down big for past 5 years because the trade war. Right now China is buying from US because Trump was forced them to. However, what if Biden is not? We just don't know. It has too much politics involved. It just beyond my control. AI Robot rather dealing with the stocks of companies that operate in agriculture. Those companies are gigantic in size and money. They are either control the machinery, chemical, or seed bank. There is no way other nations able to compete. For instance, the Vanek Vectors Agribusiness ETF mix among the roughly 60 stocks in the portfolio, about a third of the ETF's assets are in consumer staples, with another third in materials and the remainder split between industrial stocks and healthcare companies. Half of funds' assets are in US stocks, Canada and Japan taking the other podium positions among foreign countries. This ETF was the only one that make money over the past 5 years even as crop prices fell. On the other hand, the biggest commodity ETF is the PowerShares DB Agriculture Fund. It invests directly in futures contracts for farm and ranch commodities. Grains like wheat, corn, and soybeans make up about 40% of the portfolio, with cattle and hogs representing another 30%. Sugar, coffee, and cocoa split another 25% of the fund, with the remainder going to cotton futures. The losses that the ETF has suffered reflect the poor performance of agriculture commodity prices over the past 5 years. Even though it has recovered last year, nobody knows what will happen next year. AI Robot is absolutely not invest in the commodity futures. It is just like the market risk that beyond AI Robot's control. Please subscribe to my channel if you want to learn more about investments or asking questions. I will cover all investment instruments which including stocks, bonds, real estate, and commodities. Please remember that money making is started at 1/8 at a time. We cannot become millionaires in one day.